and I think that's great that you are sending the pairs. That means that you want to plan your week, and I think it's useful to sit while the markets are closed and just look what can we expect from the market. I think it's also important to understand that when you're looking to review something, it's useful to look at the different time frames and try to understand context and bias. So context for me is what and how the market did, and what the price did, and then bias is based on context and means that we will have our main bias, which is a direction in what we want to trade, and then we can have a secondary bias, because of course we understand that market can do different things, but based on connections between the time frames and between the context, we can understand the main bias and secondary bias and then look for zones for confirmations and continuations. So for instance, so these are the pairs you sent me. Let's start with US100. So on monthly, we are situated on this big sorry, 1 second, on this big impulse. Yeah, so on this big impulse with this low and with this high. And of course, when we are in the impulse like this, we can expect continuations and creation of a new higher high, but based on context and what price is doing right now, it's moving down, and we see that our main demand zone is below 10k, and also we see that we have right now these equal lows, which the price usually in such context, price will just go and attack everything here and mitigate the main demand. So this is the context from monthly. So though we are bullish overall, we understand that we have a lot of reasons to go down and mitigate the main zone. Now let's go on weekly. On weekly, we have the supporting context because we are also moving. We are now on weekly are in direct bearish structure. So what it means is that price was bullish, but then shifted bearish and mitigated this zone, and then shifted bearish again, shifted bearish again, shifted bullish, and now shifted bearish with this close below the low. So let me actually see if we closed below this low. So 1 second. Yeah, actually we did close. Of course, it would be better to see closure even lower, but technically it's a break of structure. So now we are in this bearish weekly range with this supply zone above. So now on weekly, our expectation would be 1, this, and second, pullback and continuation. So actually, technically, we can expect pullback to any zone here and a continuation, but for weekly, we don't need to have such an exact zone. So let's just go on daily and see. So again, yeah, monthly is like bullish overall, but with bearish context. Weekly is directly bearish right now, and daily, of course, is also directly bearish. And daily, of course, is also directly bearish. And from where we had, we had this structure. So we had this structure, which was broke here and then broke again here. So now we are in this bearish move, and again we can expect either this or this. So this would be even more possible scenario. So bigger pullback, mitigation here and continuation to the downside with this low as the first target. But if you go even lower, you will see that right now, like everything is very bearish. So everything just moving down on 4 hours. So let's just stick to 4 hours and that's all. So on 4 hours in the end of the previous week, we had this break. We actually had this move, then this break, which came from here, now a new break, but everything's mitigated here. So again, on 4 hours, I would expect first this and second this. So this zone. So yeah, this is the outlook for US 100, very bearish, and I showed some zones to look for confirmations. US 30 is basically the same. Very interesting. I don't remember to mark it up. Strange. Oh, maybe it's from previous week. I don't know, to be honest. Oh yeah, maybe it's from previous week. But again, on US 30, we already are in demand zone, so we are already mitigating it. So our first expectation is for price to hold the zone, so not close below this. But usually what price does, it will not go like this. It will perform some kind of accumulation like this, but it failed in the end. I mean, it didn't fail, of course, because it created lows and then a spring and like markup. So something like this, but maybe probably not so big. I mean, it's just how many years? Like 3 years, yeah. So I hope it will not be this big, but it can be. So something like this. So this is what we can expect over long term, but now like, I'm not trading such long-term trades. So right now we are just bearish on weekly, we are bearish on daily, and yeah, this this was from previous week, and everything is still the same. Let me see. Actually we now are in this new range. So let's go on 4 hours. So for US 30 again, I'm just bearish, but I don't like these zones. Okay, these zones are mitigated, so I would better stick for US 100. So we could use this zone or this week, but yeah, so these are two zones to look for continuations. So like this or like this. So this for US 100, I just think that we should mitigate deeper into the zone. And then, so we will have maybe 1 or 2 bearish weeks, and then maybe start to see some bullish shifts again. I don't know what will happen, but following the price, we are like this. Now let's look on GBPUSD. On GBPUSD on monthly, we are very bearish. We had this previous structure. So we had this structure, now we broke it, and now we are bearish. So of course, after this break of structure, we can expect two things. First of all, we can expect continuations like this from monthly, or if price will start to shift on lower time frames, we can see that we have unmitigated zones here, and of course we could have some context to go higher. So on monthly, actually nothing too specific. Same thing on weekly. We recently had a break and we have this zone, so we have possibilities, first of all, to continue the impulse to the downside, or if the market will want to do it, it will perform a deeper pullback. On daily, so on daily it's more interesting and more practical. On daily, of course, we are bearish. We recently broke very bearish. So we had this high, we have this low as our target, and now we are, so I will show this on 4 hours. Yeah, so actually if we look on daily, yeah, so on daily we have this zone to look for immediate continuations, and I will show you on 4 hours now, or we can expect some more pullback and continuation. So on 4 hours, as you see, this is one move, and then just pullback in the form of a flag or in the form of inside structure. And we have this really nice zone. However, first of all, it was mitigated. Actually, no, it's unmitigated, and we are mitigating it now. So our first expectation based on technical analysis would be to hold this zone and for market not to close above. However, first of all, you need to understand that this zone would just barely mitigate it, and usually price will go even higher and even can grab some liquidity before shifting back. So, and this is the first consideration. And second consideration is, for me, I really don't like these overextended impulses, because I noticed from practice that it's much more practical to trade something like this. These impulses with average extension, they are, like I call them, calm impulses. They are not so obvious, but usually they produce these easily predicted continuations, you know. So in this case, we didn't have a really good mitigation, but overall I like price action, you know, more like yeah, like this, you see. So price is just moving in average with average extensions. So this break, again, we didn't have like a direct mitigation, but it would be okay to look for something on lower time frame. And again, we have this break. You see, the moves are small, but they are not overextended. And what this overextension means is that when price comes, price needs to do a lot of inside structure while coming back, and that this means that it can easily overshoot the zone and then even break it and maybe just continue up. Okay, so it's more based on experience, and this a very quick explanation, but usually I don't like these ranges to trade directly, and if I would trade it, I would maybe wait for one more shift. So now we have this shift on 1 hour, okay, and again, perfect mitigation. So based from technical analysis, this is like really perfect A quality, high quality scenario, okay, but just based on experience, so technically we just can really enter right now and just expect this to break as targets, okay, but I really think that we can go and mitigate higher, and after it happens, I would wait for a double shift, maybe on 30 minutes or 1 hour, and then I will like trust this zone. But yeah, it's perfectly fine to just on London Open tomorrow, if price will just be here during Asia, just open a trade something like this, or if you want to be like more, give more room, something like this, and that would be a fine trade. But just consider what I just told you. So yeah, but overall very bearish. If it breaks, it can go and mitigate higher targets here, and then if that breaks daily, it can go even higher to mitigate monthly and weekly zones. But now, right now, very bearish. Now oil, yeah, someone sent me oil. So oil is right now again mitigating the zone, the demand zone from this monthly impulse. So we have monthly bullish impulse with this protected low, and based on context we can mitigate lower. Then weekly right now is just really bad, all is just wicks, no clear price action, so let's just skip it. Daily is more clean, but let's go to maybe to 8 hours. So this was the chart I sent in one of my last ideas for US oil, and as you can see, we had So I don't remember what exact time frame it was, but we had this break and we had this unmitigated with this imbalance zone, and we have mitigated it and started to fall down. And our target, of course, is this. So first expectation is just to continue lower. And if we will have pullback, then maybe this zone, so not maybe, this zone should play as a protected high and then continuation down. And even if it breaks, we still have some room for confirmations and go to the downside. So very bearish on oil. Of course, if we will see some impulsive price action and if this zone breaks, of course, we then can switch our bias and look for some continuation to the downside. But overall, I don't know. Yeah. Oil here, I didn't like it because it just was moving more like in a side range, you know, so side range, and but yeah, recently we became more impulsive. So overall, very bearish for oil. Same thing for gold. We have this bullish expansion. We have some zones we are mitigating now, but based on weekly, we just shifted bearish, and any kind of pullback we should see as a potential point for mitigation and continuation. So we are really right now in this point, or if we break higher, we can look for shorts from here. Or if you want to be bullish in a market like this, you need to be like aware that everything here is just a mitigation of this bigger zone. Right now on 1 hour, we are bullish, of course. So we had this really nice shift to the bullish side. So let me see. Let's go for 2 hours. So nothing here. Everything is mitigated. So yeah. So first of all, we need to see that we had a shift. So right now we are in this bullish range from here. This is a protected low. This is a zone we are mitigating right now. And if you want to be bullish, just wait for some shifts back bullish on 5 minutes, because as you can see, 5 minutes is bearish and bearish from here. So if you want to be bullish, wait for this shift and then enter to the bullish side. Or if you want to be bearish based on 4 hours or 8 hours chart, so we had this zone. So we have break to the bearish side, and we had this zone. We are mitigating it now and started a bearish reaction, and our main zone, our main target and our main bias is of course bearish. And again, sorry if I'm going too fast now because I have 2 minutes only. If you want, send me questions about gold. So we are overall bearish, and if you want, you already can. So I don't like these shifts, of course, but maybe you can wait for a fall down, and then maybe this zone will be the zone to look for mitigations. Or on lower time frames, of course, you can wait for some new shifts. Okay, so overall very bearish on gold, but we need to see the fact that we started some shifts already on lower time frames, and if you want to risk a bit, you can use for this price action. So yeah, sorry, maybe a bit confusing on gold, but yeah, send me questions if needed. EURUSD, see previous analysis. It's exactly the same, very bearish. This is a bigger zone to look for mitigation and continuation, and yeah, but probably it's better to use this refined zone. So expect more pullback to the upside and then reshift back on lower time frames. So it would look something like this. and enter from here. So overall, very bearish on EURUSD, but still expecting some pullback action. Or yeah, as I see, we have this break and this zone, so even we can use on, like on GBPUSD. Hi everyone, thanks for sending me the pairs.